Welcome to Echo45 Advisors Market and Economic Update for January 2025. In this video, we'll go over some of the major market drivers for the first month of the year and the start of President Trump's second term. Markets began the year with gains despite volatility, with major indices up. The S&P 500 by 2.7%, the NASDAQ 1.6%, and the Dow 4.7%. Meanwhile, economic indicators showed mixed signals. GDP growth came in at 2.3% for the previous quarter, but inflation remained above target, with the consumer price index up 2.9% from a year earlier. Let's get into some of the key events that most affected markets and the economy over the past month. First, Chinese company DeepSeek's reported AI breakthrough caused tech stock declines, with market uncertainty rising from these claims. DeepSeek claimed a 95 to 97% reduction in resource and energy requirements to train cutting-edge AI models, leading to a market sell-off with the biggest loss in value for a company in a single day when Nvidia fell by 17%. This impacts all investors, not just those focused on technology stocks. This is because the tech sector, including the Magnificent Seven stocks, has grown in size and importance, driving the overall market. Tech sector valuations have also risen substantially compared to other market segments, highlighting the importance of diversification. Next, President Trump signed executive orders to implement new tariffs, 25% on Canada and 10% on China. He also signed an executive order for a 25% tariff on Mexico, but agreed to postpone for a month in exchange for concessions on border security. These tariffs were expected, but have rattled investors nonetheless. It's important to keep in mind that the first Trump administration's tariffs also led to investor concerns. Markets still performed generally well over that period, and tariffs were often negotiation tools to achieve trade deals such as the U.S.-Mexico-Canada trade agreement and the Phase 1 deal with China. Meanwhile, the Fed maintained interest rates at 4.25 to 4.5% at its January meeting, following 3 consecutive meetings of cuts. Given the slight acceleration in inflation, a strong jobs market, and continuing economic growth, January markets experienced overall gains despite volatility, highlighting the importance of maintaining a long-term perspective when it comes to investing. As these developments escalate and the tariff story evolves in February, investors should maintain perspective and not overreact to day-to-day news. We hope you found this monthly market update helpful. If you would like to discuss any of these topics in more detail, please don't hesitate to reach out. We look forward to speaking with you soon.